Can you hear me well?
I hear you fine.
Good. Hello.
All right. It's
This is
8 o'clock.
Ken and Igor.
It's Ken
Back in
Eager. It's 8
Chicago.
o'clock. It's 10 o'clock. Back by Eager in Chicago. Overnight tonight, stocks are moving higher again. God knows why. Bonds are ticking down. We're at 158.12. Major currencies are lower. U.S. grains are lower. Crude oil is approaching $84. Gold is 18.05. It's up after having a great day the last 2 days. What else is moving around here that's interesting? Natural gas is holding above $6. Igor, what's going on in the stock market? What are you seeing? I know expiration is not for another day, but what is volatility going into the next expiration?
On Wednesday expiration, volatility of 9. Well, I don't have to believe it's 9.5%. But what's interesting, tomorrow we have a monthly gold expiration. So
No, serial month. So tomorrow will be serial November gold expiration. We're always 1 month ahead. What's out there in the gold? What are you seeing?
So I was looking at the charts, 75 below and 30 and above. It looks interesting to me. So I did 45s versus 80. I did pick 140.
That's the 1780 versus the 1840 call. 1780 puts and 1840 calls.
45 call. I did
45 calls.
45. I picked 140 just for fun of it.
Okay.
And I'm working 50 at 20 and 85 at 60, just to see if somebody will pick us off.
Okay, looks interesting. I got a question for you. We have one of your reviewers that's interested in some help. This is on the equity side. Tesla Motor Company today moved up 12%. He short the stock today. The stock opened at 900. It went up to $1,025. Very impressive. He's shorted it at 1,010. He's stuck right now versus 10.25 in the future in the stock. What do you think he can do? What can he do being stuck short from 1,010?
So 1,010. Let's see what we have our options showing us.
What's that volatility at?
Okay, let's see.
Considering we always do futures, we've never done equities. Let's see, 72%. Wow, so it's like crude oil and natural gas volatility.
Yeah.
So they have weeklies. Okay, so the weekly for October 29th, what could he do?
So right now we have 150 is at the money. So they're moving it at $50 increments. So
Impressive.
he's short. He's short, right?
Yeah, he's short from 1,010. He wants to try to at least get even. What do you think?
So if he's short, then he should be offsetting it with puts. By selling puts, he's going to be synthetically long. If he sells at 42.50, he's going to be synthetically long from 08. So
okay. 1,008 or 1,007.5, something like that.
Right.
Yeah.
So that since he sold it at 10, he books in between $2 to $2.50 with this.
Okay. All right. So Larry, you're listening out there. Igor's advice is, best thing you can do, and you could do it right now. This is open. You got a 42.5 bid on the 1050 put for this Friday, October 29th expiration. If you sell it, you're synthetically long at this price at this time that we're recording this at 8 p.m. on the West Coast. You're going to get a synthetic long from 107. So what's his math going to be? You could be up $3.50 or $2.50.
$2.50.
Okay. Assuming the market stays below 50, right?
Right.
Okay.
If he goes above 50, then he will need to rehedge, but he's still keeping his premium. If it stays below 50, then he keeps his premium, and he may, if he goes below his short price, he gets additional benefit.
Here's an interesting thing. If you look there on the volume for the stock up there, it's 62,800,000 shares. So realize that means that this thing has traded $600 billion in market cap in one day, being $1,000 a share.
Nothing to
So it's
sneeze.
almost $1 trillion of money moving hands. That's very, very impressive. So
In one day.
in one day, I mean, that's like the whole market used to trade. Very strange. Anyway, all right. Well, I think you gave Larry a good hedge, and if the market moves up, email us back in, and we'll give you some more advice. And anyone else out there that's stuck on a trade, long or short, we'll show you how to hedge your way out with options. That's the one thing we do very well. So that's the plan. Sell it now. The 1050 put for this Friday, October 29th, you're going to get around $42 to $43.
It's a good example. Yeah, to sum it up, it's a good example why we are doing indexes.
Why we do indexes and real commodities. I mean, you can say whatever you want if you guys really believe in these companies, but this is a car company, $1,000 a share. Chrysler traded for $1,000 a share in 1929. And so did so that fall didn't work out very well. Coming up on that anniversary real soon.
Well, our friend Larry is short at.
Yeah, he was in great man. But anyway, remember something. No matter what you do, professional traders do not do things that are unhedged. So it looks real tempting to try to short something like this or to try to trade something like this. But real traders always have a hedge on. We do not risk money. You're doing this as a business.
Because you're going to have a day like this and
you lose your ass. So, all right, that's it. Well, let's wrap it up so that people don't get bored. And we'll check in tomorrow with the gold expiration, and we'll keep a mind on little Larry here. And hopefully other people will have something for us to hedge for him, too. So God bless. Have a good night, and I'll talk with you soon.
Enjoy. Bye-bye.